For listeners maybe less familiar with that term, premium zone, what does that actually imply in practice?
Simply put, it means that structurally the asset is considered expensive right now. It's trading above its immediate sort of equilibrium point. The highest priority target, the up magnet, if you like, is that buy-side liquidity pool right at $253.61. That's where short sellers likely have their stops resting, and, well, institutions often target these levels for a quick liquidity sweep.
Ah, okay, so hitting $253.61 isn't necessarily pure strength. It could just be the big players fishing for stops to fill their own sell orders.
Exactly right. But then, if we look down, the down magnet is the discount zone. That's where you find market inefficiencies like unfilled orders or gaps. Specifically, there's a pretty deep void below $200, targeting maybe $175 down to $150. So this really sets up the chess game, a potential upward raid or a downward correction to rebalance things.
And where's the line in the sand between those? Like the center of gravity for this whole push and pull?
Well, the crucial internal level seems to be $200. W.D. Ginn, whose work we'll get into in a minute, he defines round numbers like this as the natural level of gravity or balance.
Yeah.
If the price holds above $200, the outlook is, constructive. If it fails $200, then we're probably heading down towards that deep discount zone.
Right. The tension is palpable. $232.30 stuck between that raid target above and the gravity floor below. Okay, now let's see how our panel of 4 trading masters read the next move. Let's start with the grandfather of market analysis, Jesse Livermore, the tape reader.
Livermore, yeah, the quintessential speculator. He famously said, "The tape never lies." He wouldn't care much about news or fundamentals. His focus is purely on the immediate price action and the volume behind it. Right now, Livermore sees the price has rallied up into this high premium zone, and it's stalled.
Okay, stalled. So what specifically does his framework, Livermore's framework, tell him about that stalling action right here?
Well, he notes that the recent volume shows effort, meaning, money is changing hands, there's activity, but there hasn't been the reward yet, the reward being a definitive breakout to new highs. For Livermore, trading is all about confirming the crowd's conviction, and right now, the crowd is clearly hesitating at $232.
So he's sitting on his hands, he won't make a move just yet. What's his actionable pivot point then?
$253.61. That's his acid test. He'll only consider entering a sustained long if the market definitively breaks and holds above that high. But if demand stalls right there, or worse, reverses immediately after hitting $253 if the tape shows clear rejection, then weakness is confirmed. And he'd expect a pretty swift move back towards that $200 gravity level, maybe even down to $175. His wisdom really is rooted in confirmation, waiting for the market to prove its hand before he commits capital.
That reliance on visible, immediate proof really stands in stark contrast to our next philosophy, ICT, or smart money concepts. This framework is all about trying to anticipate